Hi, everybody. It's Kim Opolinski from the Baga team at Royal LePage Norelta. I am doing a interview with Tara Borle from Mortgage Architect this morning so she can explain to us what is going to be happening with the new rules from CMHC. Hi, Tara.
Hi, Kim. Thank you very much for having me today.
Well, thank you very much for agreeing to do this so we could get the word out there before all this starts. So, what are the new changes that are going to be happening?
Kim, there are three changes that are being announced by CMHC. Number one is there will be no more flex down program. So, what that means is there was a program in place where a client could borrow the money from a credit card or a line of credit and use that towards the down payment. And then the client would move into the property. They would have a payment on the line of credit as well as on the mortgage that they just took out. It was harder to qualify for that program because you had to have a really good credit score. CMHC said effective July 1st, they are no longer going to be using that program. I don't think that that's going to have a big impact right now on a ton of people just because there wasn't a lot of people that were using that program. I think we probably did maybe 10 this year so far. So the majority, I think, of first-time home buyers have saved up their down payment and are moving into the property without borrowing it. So that's the first change. The second change is that one of the borrowers on the application has to have a credit score of 680 or higher. So having a credit score of 680 or higher is hard to do for quite a few people. I think that that change is going to have a bigger effect on new home buyers.
Mm-hmm.
And the third change is they have lowered the TDS and GDS guidelines to 35 and 42. So essentially what that means for a new home buyer that is pre-approved right now under these new changes, they're going to be pre-approved for about 10% less. Few other things I wanted to mention about this program is this is CMHC's announcement. There are three different insurers, CMHC, Genworth, and Canada Guarantee. It's CMHC that has announced that they are making these changes. Genworth and Canada Guarantee, we have not heard from them yet whether or not they're going to be implementing these changes also. Fingers crossed that they don't, but historically they have followed suit, but we don't know if they're going to be doing this as well. And this only affects clients with less than 10%, less than 20% down. So any client that is getting a CMHC mortgage, so going through one of the three insurers.
Okay. So if a client's pre-approved right now, after July 1st, are they going to have to get pre-approved so that they we know what the new amount will be that they qualify for?
Good question, Kim. I think that it's important for if you're shopping and if you're actively shopping and you're pre-approved, you should be phoning your lender or your mortgage broker right now and just double checking your numbers, because just because CMHC is implementing this on July 1st, the banks can implement this change faster so that their systems and underwriters are set up so that when the change does come into effect, they're ready for it. So if you're actively looking, I would phone and just get a double check on your numbers.
Okay. I did yesterday. I phoned all my clients that are looking right now and let them know about this so that they are prepared. One thing I'm not quite sure of, because I sort of heard this through the grapevine, is as long as they have an offer in before July 1st, doesn't matter if they take possession, but as long as it's in before July 1st, then there still will be the old rules.
That's correct from what I've heard, Kim. This announcement is relatively new. Historically, with their previous announcements, that's how it did work. For example, the 40-year going down to the 35-year, the 35 going to the 30, the 30 going to the 25. So now with this new change, I do believe that's right. If you've written an offer before this change comes into effect July 1st, then you should be okay under the previous guidelines. The other thing, Kim, you got to remember too is we still have those other two insurers. So let's say this does come into effect earlier, because we haven't heard from Canada Guarantee or Genworth. We're kind of in a little bit of a safe period right now because they haven't announced anything yet.
Yeah,
So
but they probably will be.
I hope not, but probably.
So what does this actually mean? Like, say somebody was pre-approved for 400,000, how much less will their amount go down?
About 10%. If they were at the very top of their ratios. So that's another thing too to remember. Not every pre-approved client is shopping at the very tippy top of their purchase price. Lots of clients are pre-approved for 400,000 and they're shopping for 300,000. They're well within their budget. This change is not going to affect them. This change is affecting the client that is shopping at the top of their budget. So they're the ones that are going to be impacted with this change, and about 10% less, Kim. So it's a substantial number.
Yeah. So why is all this being implemented?
Well, CMHC, what they want to do is reduce the demand for housing. So, I wish that this change wasn't coming into effect, but that's what CMHC is saying. They're hoping to reduce the demand for housing and slow the economy, or slow the slow house prices increasing year over year over year, slow that down a little bit.
Okay. So is there anything else that you think we should know before we sign off here?
The only thing, Kim, I was going to touch on is one of the questions that a few people have asked me, and your clients, Kim, might ask you this too. How do you keep your credit score at 680? We touched on this, I think, the last time we talked. I just want to go through that really quick, if that's okay.
Awesome. Yeah, that's great.
So the credit bureaus have recently just changed the way that they report people's credit. And we have seen a decrease in people's credit score because of the new reporting. So what clients need to do to keep their credit score up is make sure that their credit card, what they owe, is at least 25% below the limit. And also make sure you pay your minimum monthly payment on time. Even if it's $20, just make sure you pay that minimum monthly payment on time. And the other thing that is affecting people's credit is credit cards will let you go over your limit. If your limit is 1,000 and you buy something for $200, it will actually go through you will owe $1,200 on a credit card when your limit is only 1,000. That will severely drop your credit score. So if if you are spending money and you think that there's a chance you're going to go over your credit limit, either make a payment or phone your bank and increase your credit limit.
Okay. Now, what about bills like your EPCO, your Shaw bill, your cell phone bill? If those aren't paid on time, that affects your credit as well, does it not?
Cell phones are the only ones that report on the credit bureau. You'll only see an EPCOR or a Shaw if they've gone to collections. And then again, that will be affecting your credit score negatively, because that will definitely lower that 680 score below whatever we need it to be.
Okay. So again, I just want to touch again on this down payment thing. So is there not going to be allowed at all borrowing your down payment, or will there be some ways around that, or some companies they could still go through to do that?
So CMHC is saying effective July 1st, no, we are not allowing that product anymore. But effect right now, we can still do those deals through Genworth and Canada Guarantee, where the client borrows the money from a line of credit or a credit card. And Kim, you might be thinking, well, maybe that client shouldn't be approved because, technically, historically, people have to save up the money and then they've got a down payment. The reason that I think that product that they're taking away was good is it's hard lots of times for people to save up money for a down payment. And so
Yeah.
let's say someone saw a house they loved, it was 300,000 and they had 12,000 saved up. We could still get them into that house where we would just borrow 3,000 from a line of credit. So and then they would move into the house, have the monthly payment on the $3,000. So it's not that always a client would borrow the full money from the line of credit for the down payment. Sometimes it's
Yeah.
only partial that they borrowed. So it helped clients get into a house that maybe are struggling to save up that money because, with kids and everything, things get expensive.
And what about gifting? I heard that might be not allowed either. Like you won't be allowed to get
I
money
haven't
gifted to
heard
you for the
that.
down payment. No?
I
Okay.
haven't heard that, and I hope I don't. So don't jinx that, Kim. No, I don't think that they'll be taking that away. Gifted down payment, as far as I know, is still fine. No problem. I haven't
Okay.
read that anywhere. But there's
Okay,
lots
good.
of rumors going around, Kim. So good
Yep.
question.
Yeah. I always tell clients because they always will tell me something and I'm like, you know what? You can't believe everything you hear. You have to, yeah. So ask questions
It's
if
so
you
true.
don't know. Um, if you are thinking of buying something, call Tara or myself. We'll answer any questions you may have on what's going to be happening after July 1st. And we look forward to helping everybody out there buy a home still.
Thanks, Kim, very much.
Thank you for taking the time this morning, Tara. I really appreciate it. And you have yourself a great day and stay safe.
You too, Kim. Thank you.
Bye, everyone.
Bye.